When is the right time to buy a dip in the stock market? Tech stocks have been affected by the global crisis characterized by high inflation and the strong dollar. Today's video shows you when to buy the dips on Apple stock. Apple stock analysis. Let's get into it. Dip buyers mostly look forward to building a stronger position in a particular stock by using temporary price declines, also known as dips in the share price, to increase their holdings. Investors usually make this a calculated move when they expect the stock price to bounce back and exceed their purchasing price. This may present an opportunity to investors if carefully examined, since the price is momentarily weak. You are making a purchase at a discounted price in hopes that the value of the item purchased will appreciate and enhance your future gains if and when the stock returns to its previous high. The not so favorable news is that there is no unique indicator of when to buy a stock dip. However, some signs suggest that a dip is worth acting on. The first is when the stock in question has recorded favorable reports over time. If stock A was trading at $100 and soared to $150 at points, that is considered good because strong earnings generally increase stock prices. If analysts predict prices will hit $170, but then the stock opens low and declines to $130 over the next few days, then an investor could buy the dip based on his confidence in the reports presented over time. Stock prices could quickly recover in a situation like this and head toward the anticipated $170 target. Also, the random walk theory, which is also a sign you can look out for, refers to the fluctuating stock price throughout the day. Here, prices go up and down throughout the trading session, so the moment there is a dip, an investor can buy with the expectation that it will bounce back. As you look out for these signs, the next question is why you should buy in the dip, particularly for Apple stock. We'll elaborate further on this in a bit. Note, however, that this content is for informational purposes only and should not be interpreted as professional advice. Make your own research before investing. After spotting the signs, how do you buy in a dip? The golden rule is to look at sectors hit hardest during the sell-off. And Apple has had its fair share of the trauma that comes with the global economic crisis.
Oh my god.
Take a look at industries that have experienced a sharp decline in earnings and track that sector, since there could be potential for a few opportunities to buy the dip. In volatile markets, valuations are typically lower than they were a few months ago, so buying the dip might not guarantee you're getting in at rock bottom prices, even as we do our best to give you all the telltale signs of when and why it is important to buy in a dip. Do subscribe to this channel for all the information you require on tech stocks. So, why should you buy the dips on Apple stock? Primarily because Apple boasts a monumental balance sheet and significant cash flow. Apple's free cash flow figure sits at approximately $105 billion. Apple can literally run a cash flow of $100 billion a year, which is more than impressive.
At $146 a share, the 5-year chart here, we had an all-time high of $179. Yeah, $179 a share. I think it was actually at $180, but $179 a share on this chart. We're down 18%. So overall, again, that's not a big move to the downside, but 18% in a multi-trillion-dollar company is a decent move. And also, it's Apple, a very strong company, ton of cash flow, very profitable, very reputable as well. So any dip you have in Apple is a dip we should analyze and see, is this a good one to buy the dip in?
Free cash flow stood at $58.9 billion in 2019, $73.3 billion in 2020, and $92.9 billion in 2021. Remember what we said about the signs to look out for when buying the dip? This could be a good reason to buy Apple stock. It is not all rainbows and sunshine. In a bit, we'll discuss the risks and limitations of buying in the dip. Do you think these are enough reasons to trust Apple stock long term? Tell us what you think in the comment section below.
Now come with me as we binge watch the future.
Aside from cash flow, Apple's board of directors also authorized $90 billion in share buybacks. This is a mechanism the company usually adopts, as it has a record of doing the same thing last year, spending close to $88.8 billion. Although top investor Warren Buffett has largely stayed away from tech stocks, Apple is one of his largest holdings. In the short to medium term, buying in the dip might not be a great idea because sales growth of smartphones has come down after the pandemic, and the looming recession is also a threat to demand consumer products like phones and laptops. The major limitation of buying in the dip is that you never know when it will be considered wise to do so. Head of the technical strategy at Fundstrat, Mark Newton, says Apple's decline is not as alarming as it looks, and has held up better than it is given credit for. Both factors should be important reasons why markets might be in a position to bottom out at the time when they may least expect it, he posits. After releasing its reports for the last quarter, some analysts believe that Apple is overvalued. For more, check out our video titled, "Stocks About to Go Insane. Apple Stock Overvalued." Thanks for watching. We'll come your way again some other time.